Welcome to class with Daniel and the Market Doll Queen. We're going to be studying Fibonacci's on Tradingview, and I'll go ahead and let Daniel go ahead and take over. Go ahead, Daniel.
All right. Thank you. Today I was thinking that we might actually go over another great indicator that we have on Tradingview, on this great platform that you guys see right here that is known for everybody. Today we're going to study some strategies for trading Fibonacci retracements and perhaps some Fibonacci extensions. Right here on Tradingview, this is one of the drawing tools that helps us with our trading day. Okay, it's right here. So first I'm going over where you can find this drawing tool, one of the most precious ones. So if you come around here where it says the cursor and you have your drawing lines on your top left, you'll find on the third box that you have right here a small arrow, and then you're going to find a very extensive list on your third box that shows other drawing tools. Today we're going to focus right here where it says Fibonacci retracements and Fibonacci trend extensions. Okay. So I'm going to show you just a very small drawing right here, what they would look like. So this Fibonacci, this drawing tool that is really precious to us, that we use it for day trading and swing trading. This is, I'm not going into the details where it was created. I think it was an Italian mathematician who created this. They do represent a sequence of numbers from 0 to 1, and then it's like the sum of the numbers on, and with the two prior numbers, they will form these levels right here. They're called levels of Fibonacci. So this represents Fibonacci retracement areas, but not our numbers of Fibonacci sequence. Okay, so these are just the retracements that we'll find after the sequence itself. So there are derivatives, like I said, some mathematical type of a relationship they have in between those numbers in that sequence. So we'll have right here, and I'll expand this for you guys to see it first. So we have briefly from the 0 to 100, which is pretty much going to include the trend itself, whether it's downtrend or in an upper trend. You're going to have the retracement of the 23% retracement fib. You're going to have the 38% of the retracement fib. And then we're going to find two lines here that I found that's really, really precious, and we have to take an account for it and pay a lot of attention. You're going to have the Fibonacci 50% retracement, or the probably sometimes called golden retracements, golden numbers. Okay, it's the 50% and the 61% ratio of the retracement, and then you're going to have per last one the 78%. So I'm going to give you a quick brief because I'm going to separate the Fibonacci right here with my mouse. I'm going to separate this because there's a few key points here to take before we dive on the Fibonacci retracement. So if you look at those first two levels, so let's say I'm going to separate this by weakness and strength. Okay, this is why the 50% retracement, it's like a very important one that you have to acknowledge, because every trader out there is more often than not, they're watching the 50% retracement and the 61% retracement because they represent those golden ratios, right? So furthermore, the 23% will show you that only a retracement on the 23% of the Fibonacci will show you that you are in place on a very good, strong trend, powerful trend, whether it's on the upper side or in this case on the downside. So let's just say that we were on a downtrend right here, and then the stock just skimmed down to the bottom of it, and then as soon as we put our Fibonacci's, and then we see the retracement right here on the 23%, this would be categorized as a very strong move to the downside, which means the continuation to the downside might continue if the price and the vol, or in this case, if the volume precedes the price. And then further down more we go, you will see how this actually worked beautifully to find a long-term shot. And then you will have the 38%, which is a mid-strong trend, which means it's not the strongest that you probably will find geometrical patterns, which is Fibonacci will intend you to help you with, such as in this case flags, whether it's a bull flag or a bear flag, but you will find perhaps a very small bear pennant or a bull pennant, and there would be probably around this 38% retracement area with a few days of consolidation, and then they will try to get out of this area back to the 23, and obviously trying to break down the trend and then off we go again to the upper side or to the downside. The 50% ratio, why I say is more important, is this is like usually the 50% of that specific trend where traders like to take their profits and release some profits for someone who's been peg holding or has been longing on a trend for a very long time. This is like a very powerful line to have in mind with our trading. A lot of the, why do I say this? Because a lot of the funds out there are out there of the big players, they are watching these two levers, whether we like it or not. They have already these numbers in mind. Why? For very two simple reasons that I already know. They already represent part of the big move where you can release some profits accurately because they already represent that mathematical equation, but also because there's a very simple technique. Just because they are very rounded numbers for them and they really, really pay a lot of attention to. So you as a retail trader, you should also follow a little bit of their strategies and a little bit of their mindsets. In this case, the 61% sounds a very rounded number with a 0 and a 6, so it's easy to capture. But the golden ratio right here, the 50%, will literally tell you a big story, right? So we'll tell you where exactly they will probably stop with their releasing of the profits on a very short trend, whether it's down or whether it's up. So I have a few charts for you that I want to go over right now by using this drawing tool. I have some watch lists right here on my top right corner, okay? I have one chart that I would love to go to because I've been following this. Okay, I've been following this company since the IPO. I don't know if you guys are very aware. With Coupang is the CPNG is the ticker. I think they're known for the Korean Amazon. Okay. I don't know much yet about the company, although I know that's pretty much the fundamental reason I know about it. But it caught me my eye because usually when I trade IPOs, this is one of the things that I like to keep it on. I add it to my watch list if I feel that it's hot or it carries some momentum. I like to watch them, and I like to, for this very specific reason, they'll be one of the easiest things that I can do with my Fibonacci's, or will be probably the first strategy that I implemented to when I'm trading out there. So right here, if you want to classify our Fibonacci retracements, let's gonna look at the recent price action. So as you can see, we have a very like downturn open on the IPO, and then we finding ourselves after a month and a half later or two of the IPO, we finding ourselves now consolidating here in between the 41 and the 48 area. For this educational purposes, I am not whether biased as long or bearish, so you guys don't go out there right now trying to find yourselves a trade and say, oh, hey, I captured this on the class and he believes in this. No, I'm just going to do this for education purposes to use the Fibonacci as an example, so you guys later on can apply to your trading strategies or to on your trading days, okay? So in this case, as you can see, the first thing you have to acknowledge is what is the trend? Like, you know, the normal basic price action that we can have to judge on a chart is what is the trend going? What is happening with the stock right now? So as you can see, and I usually look personally, and this is a tip that I give it to you guys, focus first if you're looking already to define your short-term strategies. Focus usually on a 3-month time frame chart so you can see what is the stock been doing on the past 3 months. As you can see, since this is an IPO and it's already been at least a month and a half or so, I think it's very clear to you guys, and you guys can type it in if you want, if you can see a clear picture, what is the stock doing right now, right? After the IPO, as per usual, the IPOs like to do, they like to dip a little bit before after the open. They like to consolidate out there before they do some sort of recovery, or if it was just a really, really bad IPO and they didn't have actually much going on at the time, they can literally stay right there and keep going down for the very, very long term. And who knows, might turn into a mid cap, and God knows what happens if when they bottom, they would be able to recover. So in this case, I want to go from this is a very short-term trend, which means it's going down. So I want to take the top and the bottom. I want to take the resistance, which was right here on IPO day, right here at 68.90. I want to take right now the bottom of it. I want to be like, okay, what it is the trend struggling? Where is any sort of consolidation? It is any area of oscillation in between that price. I will be able to distill this trade for you in a minute, second. So I'm going to place my trade. I'm going to place my Fibonacci. So in this case of a downtrend, I'm going to take the top and the bottom. Okay, so we start from left to right. Okay, so I'm going to take here the bottom right here. I want to identify, in this case, sorry, it is in the opposite way. Oh no, so I started right. Okay. So, and here we go. I'm just going to extend, usually you should extend to the training here. I'm just going to extend the Fibonacci's for the training purposes and for you guys to be able to see it
Okay.
in a better view. Okay.
You can also, just so you know, Daniel, you can also right click that and you can extend it all the way to the right or to the left, just for those of you that want the Fibonacci's to cover your chart.
Exactly.
But go ahead. Go ahead, honey.
All right.
Yeah.
So, thank you, Liz. So as you can see right now, we already found the short-term trend, and we just place our Fibonacci's. Like that's pretty much one of the easiest things you can do if you evaluate where the trend is going. Right now, we have our fibs in place. Right now, to the price action that is until was yesterday, Friday, you can see that the stock finished around here 41.90. And you can see here how this Fibonacci and these lines work. And like I said, guys, at the IPO, you could have probably did this. I'm going to even stretch out on the IPO day or like 2 days after the IPO, and you would find a really nice strategy to probably use to trade. So how do we trade this? And I'll distill it for you in a second. So as you already know, the 23% and the 38%, they do reveal still in a strong position when in measuring the trend. In this case, on a downturn, we are measuring that the strong, if retraces between the 23% or the 38%, it's still on a very strong move on the downside, right? So as you can see right here, you would be able to retrace exactly where this line is, the 23% retracement fib. So this is what you probably would have done 2 days later after you see this the stock gapped up, right? And you notice, oh, hey, it's IPO, it's already been out of the market for 2 days for public trading. So how am I going to play this? What would be the right play here? So you find the second day was a little bit of a bounce. So if you play this overnight, you could have actually grab some shares and probably play a little bit for the short-term bounce. And right here, this is a very mathematical and it works quite often. In this case, we just figured out that it was a retracement here, which means a weakness on the upper side. So it's very small bounce on the 23%. So it indicates us, after watching on the fourth day, that this trend is really, really strong, right? This is at least what we would assume as traders or even short-term swingers. That's what we would assume. We retraced the 23%. So what does this with? So let's place some lines right here. So to me, this would have screamed a very strong short-term bearish flag. Okay, if you are familiar with it, we already have a pull, right? We have a little period of consolidation here. And then, what do you know? The next 2 trading sessions, they dipped, or almost a 3-day trading session, they dipped from a high of $50.51 from the day that was open, and they came down to that low of $42.61. That's around $7.50 of a play, guys. So this could have been still for you, because not only we went back to the bottom of the trend, and then we had the first day where we broke out, and then the second one we tried to keep going down. Now, what do you ask me? What do I do after this? I mean, you can still leave your Fibonacci's in play at this point, okay, if you really want to. But the thing is, the trend is going to develop itself again and again. And you will see that these levels won't lie to you as much. So you can see already that it could have defined right now new levels of support and resistance. So you already know that this line showed a significant strength on the stock, right? And then you already know that this line is the breakdown line, and we had some oscillating in between these prices. So the range for the first trade would have been $42.71, and would be the bottom of the line would be 46.26. So you know this area of a breakdown is very important, and this is where you're going to find some sort of volatility. So how do you define this again on the trade? Well, you notice that the stock really didn't try to break down and then try to retrace back. What I usually call it is for a test and a retest, right? So this was a good retest here, and you could have said, oh, this looks really good. But the thing is, the volume, it was trying to tell me that maybe we can even bounce a little bit more to trying to test these levels. I never saw these levels getting tested again. And if you guys look at this candle right here, this is a doji. This shows indecision in the market. You also have to be careful with your candlestick patterns and your candlestick strategies. More often than not, they will reveal a lot of the trade, and it wouldn't care much about the other indicators itself. So these strategies, and one of the most powerful candlesticks that you can have out there, and this is why I'll time the stock, is the dojis. Dojis, they usually reveal indecision in the market, which means it can actually go up or it can keep going down if we're already on the downtrend. So it doesn't mean because it ended up green, that means, oh, wait, this actually is going to reverse. Well, that probability shows that it doesn't really actually goes into what is the price action says on the color of that candlestick. It just shows purely, immaturely, no direction in the market, a very big indecision in the market. So this would be a good candle to me to pay attention for and say, hey, if we break these levels and we make a new high, we already know maybe you're going for the bigger bounce, and maybe you can go right here to the open of the IPO price. Or if it opens lower or it fails to break this high, and then we pick up on volume and on the downside, we might actually continue and return to the downtrend. And well, what do you know? The next 2 days or 2 days and a half at least, this is where we went. But the volume was so dry, and I'm placing my drawing tools right here, drawing line. The volume was so dry, it means the sellers, they do step in, but for a very short-term period. So what do you know after? You just extend your Fibonacci lines, right? And you know already that the breakdown line is a very powerful trend because you already break the short-term trend. And then you know you have to consider right here at the doji that the 23% fib, it will be a big matter of importance. So what do you know? We had an actual bounce from the bottom, okay, that it went almost back to the 23% area. But then you can see even volume was still low. It's a new IPO, but it still trades on the millions. You can see that the bears are in control of the float, and they're still very keen to taking this down. Right now, I usually use also fibs after finding the first retracement to me, and this is my opinion from my experience. After I already identify the levels, this is going to help us, guys, identify short-term geometric patterns. And as you can see, I would like you to ask you this question, like after making this first higher low, and then as you can see on the 23% area range close, we made a new higher low again. I want you guys to probably to be able to see what kind of formation do we have here? Because to me, this screams that we are forming right now a descending triangle.
Okay.
Okay. And as you know, descending triangles are very bearish
Yep.
pattern. Correct? You already have your pull. You already have your pull right here. And then you have your inside flag zone. Okay. And we just kept making higher lows. So to me, as you can look at here, we are already in an area of where you're probably going to break down, and then we might continue. Now, to use your Fibonacci's, I can give it to you guys another little tip, okay? One of the indicators that helps you to define your entries in your retracements or for your pullbacks that you look for, use your MACD. I'm going to get out of this example right now, and I'm going to choose another complete different stock for you guys. Or Liz, I'm going to ask you to intervene with me. Might want to give me a stock that I might have on your watch list that I would love to see with some Fibonacci's, and you would love to know where is the retracement. So I will do this unfolded blinded with you, so I don't know exactly how to
All right.
just
Bank of America, BAC.
Can you give me one chart?
BAC.
All right, BAC. All right, there you go. So again, guys, back to the principles. Price action, okay? As you can see here, if you scroll down and you go back at least, let's say, okay, this is the 12-month chart, okay? Know your support and resistance. So this already tells me the price action that, yes, definitely, we already broke above the previous resistance, which means we are already in breakout areas. But it means on a short term, and like I said, on the last 3 months chart, I'm looking right here, from March, April, and back to May or February at least, I can see a very solid breakout with a very short-term downtrend. Okay, so what do I want here? What do you guys probably want me to say? Okay, I already on a breakout, so it means this, by mathematical equation, this would have been our low. Okay, this would be our low. We already breakout, so it said, okay, after the breakout, and you already have a new low, higher low, how do I place my trades now? Well, it's very simple. You want to trade the breakout, pick it from the lower low, take it to the bottom, right here to the top, find the top of the previous trend, which was these 2 days. You had the double top right here.
So you're placing it from the bottom to the top now?
This line.
Okay.
To the top.
Because the trend is an upward trend.
You can see here. Now we are in an upward trend, which means according to the 12-week chart, we already are in a breakout mode, which means we already left the previous trend. We're already initiating a new one. That's why we're calling it breakout. Okay, we're initiating a new move in this case to the upside. Okay, we already have our test and the retest. Right now, as you can see here, guys, I can make this up because like it's literally there, right? Look at this. Here's your 78% retracement. Exactly. Like, I mean, look at this candle and what a buying signal that you had on your chart right here. I mean, you had your bottom and you have your top of your short-term trend, right? After the breakout, put this in mind, after the breakout. And then we were doing, let's say, Bank of America is a $40 stock. You already know this is like a mid-large cap situation. So as you can see right here, this was supposed to be a very weak uptrend. Okay, but after this day, because we already went to the 61%, okay, look what happens 2 times on the 61% retracement. You could have bought it here for the bounce, but look, it struggles again to pass the 23% fib, which means it's getting on a week, but it's on the upside again because we're struggling even to pass the 23%. And so the breakout is not in place yet. How do I confirm this with another helping indicator? Guys, right here, you would have played on the short term on the upside, but on the long term, I would ask you to wait probably another 2 or 3 days for confirmation. Look at this.
Downtrend.
Telling you,
yeah,
it's far from being the cross. And the MACD, the histogram, is way making noise, which means the momentum of the downside, it might still not be over. So that's why I say, if the trend would have been strong for you to get loaded for the upside, yeah, you would find a bull flag like you found it here, right here on the 23%. But you already have a double top kind of situation going on here for at least consolidate on the 3-4 days. Look, big rejection here, at least 2 rejections of the top. And when you open on this candle, we already make at least 3-4 of the new previous higher highs. This is a very bearish move, right? So you would say, okay, maybe we will retrace around the 50% or the 61. And look at right here. I'm not making this up, guys. Look, we did retrace sharply on for a very short time period, in a short time frame. We bounced from the 61%. But then you have to account where we're doing the double top formation around this area right here, right? So you would say, okay, maybe I'll wait for the pattern to develop and then I'll continue to the upside. Okay, what do? You keep this stock on your watch list. You leave your Fibonacci's in place, you extend them, and then pay attention at this small indicator. Look, guys, I don't have too many indicators on my screen. I have 2 of the most used and the most precise indicators you can guys find in the market. And I'll say this shit over again. These 2, they will work on most of the drawing tools that you can put on your chart, and they will work the most with your price action, and they will not lie to you. They will give you really good information. So I would say you could have taken a 2-day trade from this bounce, but on the long term, I would tell you, you might actually want to wait a little bit, or at least you want to wait for a burst in volume so you can say, yeah, I have a big confirmation, which means bulls are in control of the float to take this to a very superior higher price.
So what are you saying? What 2 indicators are the best ones? You're saying the MACD and
So you can combine the Fibonacci retracement
gotcha.
with your MACD. It would be the MACD would be probably the first indicator that you can align up with this drawing tool.
Okay.
It would be one of the best, let's say to me, and the probabilities that I found when I backtest a strategy on FinViz, or I see a lot of people trying to backtest a strategy. More often than not, you will find that MACD, it will be almost on the top of the list, and second will be almost the outside.
Yeah, exactly. Yeah, I've seen that too.
You backtest myself. I've seen a few, I've seen a few people backtesting as well and posting online for, sharing purposes to help everybody out there. We
Exactly.
know how it goes, right?
Exactly.
Stuff for everybody. And I found that MACD, even it's better than the RSI. I found because this is a momentum, right? We're already on a sharp move, whether it's in the upside or the downside. So, which means you already created the momentum down there, right? Now we need to figure it out with the retracement, like I said, measured by the colors and the first two levels, the medium levels and the two lower ones, whether your trend is going to be a strong trend, is going to be a very mild, or it's going to be a really
Okay.
big trend, right? Because more often than not right now, what do you see? What do you know? If you look at your MACD making a lot of noise and the MACD lines far from the cross, look what happens on this 2 days. Look what happened on this day. We hold the 61% fib, but what I know is in the next day it says, no, this is not even done yet. The momentum is still there, which means I still have some money on the float that still wants to push this down and it needs to cover up right now. So look what happens on this precise day. This is like one of the best, probably I would say, kind of signals that you can have on one day, trading day, to develop whether you want to day trade it, take it a scalp on that day, or add it to your watch list so you can watch this on the next day or two for a possible entry for the long-term swing. And what are you going to see right now? Well, look, right here, on this day after this candlestick pattern, which is so-called the bullish engulfing, right? We already retraced more on this pullback right here. We retraced from the 78% fib. Look, exactly right at the 78% line. This would have been a weak
Okay.
trend, right? But it's not done yet. So watch the price action for you to say, how do I enter this trade? How do I get here now? Well, after the 78% big bounce, we didn't get much volume. It's not even close to the average. So to say, do I enter today or wait for one day of consolidation or two or three? Well, what do you know? You were flagging for at least almost 2 days and a half. So I'm going to distill the trade for you. What do you have after 2 days? After the big bounce with the lovely candlestick pattern that you have on your chart. You look for the new pattern to develop on a really short term. Look, a small term bullish
You're
flag right
right
here,
there in the
guys.
golden
And
zone
then
too.
what do you know? You would buy
You're right there in the golden zone.
exactly. There you go. What else do you even need for the help of this drawing tool that is pointing you out the right levels that you have to pay attention for? Look, right at the golden zone, you have a small pattern formation, aka you have a big reversal with a bearish, or in this case, sorry, with a bullish candlestick pattern in
Right.
place, right? And look at this. As soon as you make a new high here, you would fire your money right at this point. I'm going to bring
Okay.
my trading boxes
Yeah.
because I love them so much. So you would buy your price right
Yeah.
around this area, right? At exactly the new high of 38.84. And then, guys, look at this. Like, we never
No, it
looked
just made
back.
new highs.
We
Yeah.
went to the high. And I would say to you, now for the purpose of the class that we're taking, we're doing Fibonacci's. Guys, we're getting ready again to go back to the 0% or the initial part of the trend, which was right there of the double top. So you already know this is your resistance area. So you would take this trade from 38%, and if you look at my right, on my right corner right here, he's pointing it out. We went from the 38 to the $40.31, which means if you play this on your options, you would make an excellent trade. And look at right now what it says on the downturn momentum. Look what we have here. Did you guys see how the MACD went silent? And right now we already have the cross, which means the downturn momentum, it might actually be over. So what do you do now? How do you actually play this? Because we have not only one day, but we have 2 days that is already on the breakout channel. Okay. To me, I'll do this. Now I take it off because, like I said, Fibonacci's help us to find more accurately not only intraday trades that we can take in one day or two and carry on the stock on our watch list, to also find trading patterns. Look, guys, if I start putting my lines here, I will find this very like ascending wedge in place. Okay, a bull ascending wedge. I'll take the pull. I'll take at least the breakout from the very bottom. Look, I'm not lying to you. If you know this pattern, you have your A, B, C, D, and E in place. Right now, we already made a new high. Look, watch your candlesticks and watch your price momentum. We already achieved almost the near overbought area, but it's still 65. It's still not overbought. The stock is still not overbought. And I'll repeat this. We use some indicators just to pay attention to this. Now we break out of the fibs. So this fibs right now probably won't take too much place. Why? Well, let me take these drawings back again, and I'll show you another situation here. Right now, you already know what you know about your previous resistance. Once it's breaking, you will act or try to act as support. And look what happens on Friday. He struggled to not only trying to get in or retest that area, it didn't even pass on volume that it was the previous day. It even made a new low. So we got to encroach here. We have a very small day of consolidation. So to me, you could have well watched this stock because we can still be in place of the breakout and we just keep going. Okay, so how do you now place this? Well, this is another aspect of the trading Fibonacci retracement that I'm going to bring it to you. I'm going to take this one off, and you'd say, okay, Daniel, how the hell do I find my price targets? Well, this is the beauty. You don't only just use the Fibonacci retracements, but you're going to use the Fibonacci extensions. How do you find your Fibonacci extensions? Well, the same way that I found the low of the trend and or the beginning of the upper trend and the top of it, I'm going to just to replace from Fibonacci retracements, and then I'm going to choose my Fibonacci extensions. Why? After the retracement, I just found, guys, one of the most simple patterns out there. That's the patterns they should be training the most, which is, again, and the use for our pitchforks, the ABC pattern. Okay, you could have placed the pitchfork here, but in my opinion, I would advise you right now, because you're on the breakout area, I would advise you to play this with a Fibonacci extension. So you take the low, you take the high, right? And then you go down for your BC, you take the retracement area, which was a 78%, right? And look at this, guys. Look at this. Now we have new levels that matter to us, okay? What does this mean to us? So I'm going to reduce a little bit of the trading range. So you're under yourself. Okay, now we got new levels on the Fibonacci retracement. What do we got here above the 100 line? So what do I got here if you keep going? Well, you have now future price targets where you can probably find volatility for the stock. If the trend resumes and we continue, and you're already seeing we broke the previous higher levels, aka the double top, and you're now on the retest. If the trend doesn't resume on the downside, we will be in place, guys. You know, have really price targets that you can actually have on our chart without putting any drawings into it. We'll have the first 161% retracement extension, which is the blue area. And then you're going to have the second 261% extension fib on the Fibonacci as your second price target. And then go on, you just keep going. You have a third one, which is a bigger, larger move, probably the largest move that you have on the breakout. And then you have a very well extended that you can already use another indicator in this point that say you will probably be able to use the RSI to identify that the market will be extremely overbought. And I mean extremely, like probably in the 90 plus of values of RSI might as well be placed here if you just go on a breakout. Now, if there's a breakout is on a slow momentum and we stop right here, you can just leave this here as well and just stake it to the momentum until it's over with your RSI and your MACD. Doesn't have to go this way precisely because you never know the market conditions might help this stock to actually retrace back or pull back, and then the stock might actually give them some news. Let's say earnings. I see right here in July you might have some earnings. So looking at the time frame, you might not even get the time to actually get there. You might actually be able to actually even pull back down here. Or if the earnings, who knows, it might actually be something decent. You might actually take this first line as your primer target. And then, as you know, you'll be a month and a half already of the earnings. So you may actually starting to pull back here, and then you just might as well extend the fibs, right? And then come here, trying to find the golden ratio right here, guys, which was the previous breakout, and it almost lines up there with the previous action. You might want to pay attention to it because maybe we bounce here, and on this day of the earnings, we might just, rock it if there's something good. Now I'm just speculating with you guys, doing some price action speculation before any event happens that could potentially change the price action.
All
okay?
right.
This is one chart that I want to look at least
Yeah.
me to look off.
I would like to point out that the reason the Fibonacci levels work so well is because so many other traders are using the same Fibonacci's.
Also music.
So that's why you can use those levels to set your sells or to set your stop losses, because so many others will also be using the same lines. Yes.
Exactly. And it's like, yeah, at least the golden ratio and the 61% fib are fibs or lines that the big dogs, the big players are also
Exactly.
watching. Because more often than not, those prices, those golden ratios, they will show price reaction and retracement. So you'll have two important key levels here, two important words here to have again on your Fibonacci retracements, guys. This is what I mean. Like this area right here, this is where big funds are watching. Look at look just one indicator, very simple one. Put a volume moving average on your price action, and then watch when the volume goes above that line. Look at this 50 and the 61% ratio. A lot of retraction and a lot of reaction on the price with this type of volume. And you already know volumes in spike mean big players. I can make this up. It's already there and it's on the chart. And these are lines they are watching out there. I'm making this up to you. These are the lines they watch. And look at these 2 days and look what happens on the volume with the spike. That means somebody was trying to watch here. In this case, was a short-term uptrend. That means they wanted to release some goddamn profits. I don't know. You tell me, but I will pay attention to those lines too. And this is what I do on a daily basis if I want to play the Fibonacci retracement, okay? Let me just go over one more chart real quick before I do. Let me see if
Yeah,
I can
time.
choose here.
We got time
Okay,
constraints
let me
too.
choose this one for the
Do
purpose
it.
of it. Yeah. So let me just choose the purpose for this one, and then I'll go over a very simple scan so you can guys practice this strategy yourselves. So right here, let me try to find the bottom of it and the top. So right here, double top already. I can spot a pattern, okay? I can spot it right here, guys. So I'm going to take the top, and then I want to do the full trend. What is my bottom right now? Well, if you look at the volume, and the volume spikes and you're trying to consolidate, it would be right here, okay? So right now, guys, I already have my fibs in place, and I'm looking right now after this bullish candlestick pattern with volume. I want to start looking this to break my trend and trying to go on the upside, okay? I'm almost like in place to probably find the reversal of this stock, but I'm not going to say it because I'm waiting here. Why? Look, we haven't passed the 23% fib, which means I haven't got the clear signal that this trend is going to be mild or strong to me, okay? So I'm still on the downside, and I'm watching these levels right here. As you can see, look at this breakout area. You had some reaction here. Look where the 23% shows up, and look what happens on the congestion of the of the breakdown, which means retested, tested and retested. We failed. We give the bearish signal right here on this day, and then clear downtrend. Right now, you probably would say, so where can I find this, my next support and resistance? Well, you already know that this new higher low finished with some volume above the volume moving average. And right now you would say, okay, the 23% fib, it will act as major resistance. Why? Look at the previous history of the stock, guys. I'm not making this up. It's right here. Price action on this best day. Look, we had a previous flag. We break out. We double top it. The market went into distribution phase, as you know, from February. And then we only seen downturns. And look what is he struggling now to trying to break down. Look at these areas right here. Look at the previous area. He had a small bull flag and then he break out. Right now, I'm telling you guys, he likes this line. He likes this 23%. This is probably a line where he would say, the stock we can actually base out, right? And we'll form a range of at least at $23.74 and at $36.45. And then we can find a base here, and the stock can finally start to find the floor. And then after the floor, aka the consolidation period, the stock will be able to resume the upper trend again, because you already know passing these levels, the more upper we go, and look at the golden ratio, we'll start feeling more bullish on the stock. Right now, I find a falling wedge. I just placed my fibs. Right now, I can be prepared to start to trade this stock after my watch list as soon as I see volume coming and I have what? A new higher high in place of this stock. It's a very simple strategy, very simple one to use. Make sure you have your MACDs right here, guys, just to measure the momentum so you know where you actually could be in the bottom or you can be on the top, and measure with your RSI if you're still overbought or you're still below the 50, which means we haven't got into the continuation, which means above the 50 RSI, you will continue to resume the trend. Right now, we're trying to form the floor, we're trying to base out, and this is the time to, once you probably think, if I see volume, I want to get cheap shares right here. But this comes off as scans, guys. So real quick before I end up the class today, right here, let's all go to real quick to FinViz, guys. I'm going to give you a really good strategy, really cool one, okay, where you can apply the retracements and make a bigger gains. I call this strategy the rocket strategy, okay? Guys, penny stocks, real quick. Small caps, under 2 billion. Volume, you want some liquid. Average volume, 100K. Price, make sure you're always under 10, okay? On your technicals, I want to see on the performance on today, I want to see at least a big percentage gainer, okay? And then let's do this. Let's organize our stock. What is implied here, guys, real quick before we go? What is implied here? I want you guys not to find only a 20% breakout. I don't want you guys to find a 50. I don't want you guys to find a 60 or 70 or a 90 or even a 99. I want you guys that you find a stock that previously had run 100% plus, or at least 100% move on the price action. So then I'll show you how the trick starts. So how do you measure this? Look at the price action. Look at the prices on the right, and look for something that already gives you a sense of a double on at least multiple days. And the first one that strikes to me on the previous price action, to this one. How would you trade this retracement or this breakout? Well, let's bring it here. I'll choose MOTS randomly, okay? Because this is the one that shows that went from almost $1, it went to $2.29. That is clearly 100% at least plus, okay? How do we distill this on a training view so we can place our retracement? Well, take this one off, right? Let's go to the chart, find it on training view, right here. Let's say Friday was this trading day, right? Right here, guys.
That hit my alert list, actually. Yeah.
100%.
All right, so you're going from low to high.
And then, guys,
low to high.
And then what do you know? After the downtrend, right here at the 61, guys, we had a clear indication that would have been something that you can probably enter a trade. We had a hammer, right? You had a gap up here that it needed to be filled. But apparently the volume didn't sustain the move even though above the line. Apparently, if you look to the previous price action, this is a big bearish candlestick pattern right here. So you would say we may actually go down a little bit more before we actually fill the upper gap. So how do you play this, guys? And I would say keep this stock always on your watch list for at least a month, because the momentum, when this happens with 100% plus more, it's not over yet, okay? So what do you know? Where the stock struggles? Right here at nearly the 78% fib. You could have day traded this or overnight it for at least close the gap right here at 161. We're talking about from 140 to at least 160. Probably doesn't sound too much. You saw like 25 cents, but on a $1,000,
that's a penny ticker. That's a fortune. That's a big gain.
Exactly. So how do I find the rockets, guys? How do I find rockets? Right here, guys. Just keep falling. What do you know? You try to retrace at a 78% fib, which means this area right here, where the close of the both candles telling you there's a new support for this stock after the 100% plus move. And look what happens here, guys. We're in consolidation period. So already you have your formations. We already have the bull pennant in place right here. I'm not making this up for you. And you have your pull, aka the 100% plus. Look, guys, continuation patterns. Where do you go? We're going to rocket. What do you know? After 139 again, if you sold it before, you buy it again, you make the new high on the gap right here, 150. Guys,
Look at that.
150, it hits $2.71. You can play this for a short-term swing for 1 month from 150 right here. After making a new high, you buy a 153, guys, and then you sell it on the top of your RSI, on the top of your MACD. I would say you at least you could have played the 0% fee, which is the initial prior move of the pattern, and you could have sold this at 229. This is a panic ticker. Correct me if I'm wrong. From 150 to 229, this might be a 40%.
That's a beautiful gain.
Trade.
That's a beautiful gain on a penny ticker.
So this is a very small, short-term strategy when you see a breakout with a bigger move and you wonder, man, these guys already move a stock 100% plus. How do I even trade it? There's still time and there's still a way. It just includes a little bit of effort, a little bit of watching, place your Fibonacci's, get in touch with your support, resistance, and trend lines, and this is what happens. Again, another stock real quick before we go. Last one, I promise. Right here, guys. See this move? See this long ass move?
From low to high.
This one. Again, low to high. I'm just placing it here just to abort the stock itself, okay? The full price action. So this stock started right here, trying to top, guys. But then on this day, we made a new high point. We have an ascending triangle in place, apart from the big wick. But you use your 78%, and look what happens on this day right here. Not this is what I want. This is what I want. Hold on. This is what happens on this day, guys. Right here. Beautiful confirmation. Look what happens on the stock. You go from $5.06. Next 2 days, you will know the stock is at $9.80. It's almost 100% again. From $5.10, if you want to sell it on the next day and you trade this, they trade this, and you want to sell this to the golden ratio, that's 859, guys. You take this on a high of 583 and you want to sell it at 866. That's almost like $3 move on a $5 stock. That's like at least 65% on an overnight or on a day trade. Now you tell me if this is not gains. Well, somebody needs to tell me, because to me, 65% in 1 day would have worked real well on a breakout 100% plus stock with the Fibs in place. So this is my strategy to you guys. This is my understanding about Fibs. This is how I use it. So I hope you guys enjoy it. And
I freaking love it. So does anybody have any questions? I don't think so. So guys, just so you know, when you're using Tradingview, just like I said, you can right click on the Fibonacci's, and I do like to trade the change the 50% zone and the golden zone, the 60% one, and I like to change those to gold, just so my golden zone is lit up. All right. I also like to extend it to the right. Yeah, go ahead.
Question. Is it only available if you use in Tradingview? Like if
No, you can use.
Swim,
Oh yeah, you can use. Fibonacci's are available in almost every charting platform. So Thinkorswim has Fibonacci's. I can go ahead and show you where that's at in Thinkorswim. It looks like a percent sign on your tools. But yeah, you could use Fibonacci's on any charting platform and also for any time frame. You got it.
Okay, thank you.
All right, guys, I'm going to go ahead and stop the video if we are done. And I guess we are. And then we'll do our free drawing after the video. Thank you for attending our class.